Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the top 10 dividend stocks that are too cheap to ignore. These companies are going to give you fantastic passive income, and they are going to solidify and stabilize your portfolio, which will prevent you from losing money during this time of negative macroeconomic uncertainty. So I'm going to be splitting this video into two separate parts. So in the first video, we're going to be going over the first 5 best dividend stocks that are very cheap that you can buy right now to stabilize your portfolio and give you passive income. And then in the second video, we will go over the next 5 dividend stocks. For more videos just like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's dive right into today's stories. So in this particular video, we're going to be dissecting and analyzing dividend stocks that are trading below a $35 price point that are somewhat undervalued due to the current stock market pulling back. In a previous video that I uploaded, we talked about a company named Rhythm Capital, which is a company that I personally own, and that's going to be our first stop on this list. Now remember, these companies are not in any particular order, they're only in a order due to their stock price. So we're going to be going from the cheapest stock to the most expensive stock, which will be around $35, but we're going to start off in that $7 to $12 range, and we're going to start off with none other than Rhythm Capital Corp, ticker symbol RITM. The current share price for this company trades for around $7.29, while professionals believe the company should be trading anywhere between $9 and $13 over the next 12 months. This company is an American company that provides capital and services to real estate and financial sectors. So essentially, this is a REIT, or a real estate investment trust company. And this particular REIT has a very good cash position on their balance sheet. For instance, their cash position stayed so stable during Q2 of 2022 and even during the financial and current economic turmoil that we are going through right now, including during the pandemic. So clearly, this is a very resilient company to have in your portfolio that will give you a consistent dividend, which will grant you passive income. This company declared a quarterly dividend of 25 cents per share, and their current dividend yield is around 13.72%, which is extraordinarily high compared to many other companies. So not only is this company trading at a discount because it's currently not trading in that range that professionals believe it should be trading between $9 and $13, because right now it's trading between that $7 and $8 range, on top of that fantastic and phenomenal dividend yield of over 13%. On top of that, a Piper Sandler analyst upgraded ticker symbol RITM to a neutral rating with a $9 price target. So that's another professional saying that this company could be considered undervalued. So not only are they going to make money in terms of their dividend appreciation, but also their stock price appreciation as time progresses. So again, this is another very good resilient company that I mentioned in my previous video, but again, I just wanted to put that company back on your radar, which leads us to our next company that we're going to be analyzing, which is HanesBrands Inc., ticker symbol HBI. This company is arguably fairly valued, coming in at $7.37, while experts believe the company should be trading between $6 on the low end and $15 on the high end, which it's technically doing right now. This company is a North Carolina-based multinational clothing company that specializes in everyday basic wear, according to this Yahoo Finance article. What I like about this company is that it's maintained their payouts even during the pandemic, which again makes this company very stable and resilient despite the negative current macroeconomic environment. Right now, it pays a quarterly dividend yield of around 15 cents per share, which is not bad because the share price is so cheap and you're getting that dividend of around 15 cents per share. And remember, these are quarterly dividends. I also like this company because as of Q2, the company has paid its 38th consecutive dividend in a row to its various investors, which makes this a great company in terms of passive income. Recently, I also want to point out that CL King maintained a buy rating for this particular company with a $15 price target, and clearly that price target is more on the high end for this particular company, but this means that potentially investors could almost double their money from the stock's current price while also getting a very good dividend in the form of passive income for various shareholders. So again, this is definitely a company you would probably want to put on your watch list, if any. But remember, we have even better companies on this list, which leads us to our next dividend company, which is a very popular dividend company, which is none other than AT&T Inc., ticker symbol T. Right now, the share price of this company as of October is $14.90, while experts in the field believe that at minimum the company should be worth $9 and at maximum the company should be worth $28. So arguably, this company is fairly priced according to professionals. If you didn't know, AT&T is a multinational technology and telecommunications company, which also operates as one of the largest providers of cell phone services in the United States. Their price target for this company to $18 per share. So if you really like Barclays, because they are a pretty prestigious institution, clearly the current stock price still has some appreciation left in it on top of a very strong dividend. The reason why dividend investors like AT&T is because it holds a 23-year-long track record of constantly delivering dividends and dividend growth. Right now it pays a dividend of around 27 to 28 cents per share every quarter to their shareholders. So again, we get that great passive income on top of some pretty decent stock price appreciation. I also want to say that their dividend yield is very high, much higher than the majority of stocks on the market, coming in at 7.43% as of the month of October. So this is a very well and beloved dividend stock that many dividend investors really want to focus on. Now, like I've said in previous videos, I myself am not mainly a dividend investor. The majority of my portfolio is comprised of growth stocks as well as ETFs, but I do have dividends in my portfolio. Why? Because while the stock market is falling, I want those resilient companies that have great value that also give me passive income in the form of dividends, which will prevent me from losing money unnecessarily during times of macroeconomic uncertainty like we are in right now, with very high inflation and increasing interest rates as well as geopolitical tensions. The next company I want to point out to you is ticker symbol MFC, and this particular company is a Canadian insurance company which also provides its customers various services and products in terms of finance. The company currently trades at $15.90 per share, and professionals believe the company should be worth anywhere between the range of $20 and $25. I also want to point out to newer investors that this particular company has been increasing their dividends consistently for the past 8 years in a row, and right now it pays a quarterly dividend of 33 cents per share. So if you want to buy the company for $15.90, you're going to get 33 cents delivered to your account every quarter, which would equate to around a dividend yield of 6.35%. I also want to mention that this company also has good potential upside because it's arguable that the company is currently undervalued right now as a financial institution, because Wall Street analysts are very positive on this particular company, while Canaccord raised their price target up to $25 for this particular company, and clearly that price target is on the higher end of our scale in terms of what investors think this company could be worth over the next year or so, and clearly that is very bullish for this overall company, particularly a financial company. Despite rising interest rates, it seems that Wall Street is pretty bullish on this company overall. But remember, these companies are just companies to add to your watch list. I would always make sure and recommend that you do your own research on these particular investments so you can do what's best for your particular portfolio. But overall, according to a professional standpoint, this is a pretty solid company for not only passive income but also stock price appreciation over the long term. So do with that information what you will, which leads us to our next company, which is Franklin Resources Inc., ticker symbol BEN, ticker name BEN, which currently trades for a share price of $21.85. This is a company that does fit in that range from professionals and analysts between that $20 and $29 range, so it's not like this company is undervalued. However, I do want to make you aware that this is literally one of the world's largest investment managers. This company has also declared a quarterly dividend of 29 cents per share, which would equate to around a dividend yield of 5.31% as of October. The company has also been raising its dividends consistently, get a load of this, for the past 42 years in a row. And that's really what I like to see in companies. I want to see companies that have increased their dividend yields for over 25 years in a row. This not only means that this company is a very foundational company in the stock market that's been around the block for a while, but it also shows me that they are consistently improving their dividends, it's keeping up with inflation, they are paying their investors, and they are making their shareholders very happy. So overall, from an objective view, this company is very good, even though technically it's not undervalued, and you could always wait for this company's stock price to drop lower, which would also give you a better dividend yield in contrast to their stock price. But I also want to say that this company objectively is just a pretty solid company. They also have a 5-year CAGR for their dividend of 7.71%, and also that is good, clearly outpacing inflationary pressure, which we are experiencing right now in our economy. Now, I don't hear a lot of investors talking about this particular company, but overall, I would say it's pretty good. But again, warning and spoiler alert, always make sure to do your own research, because depending on what investment strategy you want to utilize or what type of investor you are, this may not be the best company for you. Some dividend investors like higher dividend yield rates, others like better stock price appreciation on top of a okay dividend yield, and then other investors really want to see dividend aristocrats that are consistently increasing their dividends year over year for a very long time, plus a very high 5-year dividend CAGR, which is a compounding annual growth rate of over 7%. So depending on what type of dividend investor you are, this could be either a good buying opportunity or not a good buying opportunity. And if you don't know what type of investor you are in terms of dividends, I would highly recommend you do some of your own research and you read up on what's the best dividend strategies for you. And speaking of the best dividend strategies, that is going to conclude our first part of this 2-part video of some of the best and cheapest stocks to buy in terms of dividends. Again, the only reason the stocks are in this particular order is due to their share price, because our first stock that we talked about was around that $7 to $8 range, and now we're getting into more expensive stocks going from the $20 to $35 range, particularly in the next video. But that would wrap up our video for today of the 5 best dividend stocks that are very cheap, that are still giving you a fantastic dividend yield. So for more videos like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.